Sometimes we make investing entirely too complicated, so I wanted to put together a list that just keep it simple. I'm calling this my Keep It Simple stocks. Let's start with a good way to think about these companies. Sometimes the best investments are simply staring you right in the face. Let's start with a company that we all know, Apple, market cap of $2.7 trillion, net income of almost $100 billion in the last 12 months, a ton of cash on the balance sheet, pretty high PE ratio of 27, but let's be honest, this is the market leader in smartphones, and I don't think smartphones are going anywhere. You look at expanding their services revenue and the advantage that they have in chips right now. This is just a stock that keeps it simple and is a great value long term. Here's one sentence that sums it all up. The iPhone is arguably the most important product in the history of technology, and it isn't losing market share anytime soon. I want to take a quick second to thank this video's sponsor, The Motley Fool. Check out the link in the description to get their top 10 stock picks right now, or go to fool.com/rive. It really helps out the show. Again, fool.com/rive. That's right here. The second stock here is also a technology stock. That's Microsoft. $2.1 trillion valuation, $73 billion in net income, almost $60 billion in net cash on the balance sheet. Again, a fairly high PE ratio of 28, but that's because it's such a strong business. Why do I like this company? Well, this is what business runs on. The Office suite, Teams for business, Azure in the cloud, and then they have this gaming platform for consumers as well. I just love everything that they're doing. And we can keep this really simple. Business as we know it would come to a screeching halt if Microsoft products went offline. That basically says everything you need to know about Microsoft right there. Let's keep it simple in retail and go with a company that's doing everything right now. That's Target, $75 billion market cap. They do have debt of $14 billion, but a PE ratio of 18 is pretty reasonable and 2.7% dividend yield. Why do I like this retailer? Well, it's relatively upscale shopping for a big box retailer. They have convenient locations, and the shipped and drive up products that they've introduced in the last few years really leverage their locations. Sum it up in one sentence, and Target has figured out where it fits in the modern shopping landscape. And it's leveraging the quality and convenience that shoppers value. Target knows it doesn't have to be Amazon at this point. It can simply be the best version of itself, and that's good for investors. Apple, Microsoft, and Target have been really great performers over the last decade, but these might not be world beaters going forward, and that's okay. We're just keeping it simple with this group of stocks. I don't think investors can go wrong with them. They do pay dividends. I think those dividend deals will go up over time as well. All three of these companies have pricing power, and they have a solid moat in their given marketplace.